Okay, question number 5's got 2 parts to it. The 3 bases of comparison used in financial statements are intra-entity, inter-entity and industry averages. Briefly explain the reasons for using the 3 basic assumptions. Okay, so we've got intra, entity. What this helps with is detects changes in your entity, your financial costs. Within the business. Inter-entity compares to other businesses. So really market performance. Well, maybe not market performance. And industry averages. Is about market performance.
So it says inter-entity something to other... That
compares. Market comparisons. Oh no, it's not market comparisons. Not market comparisons. Market positions. And that's these easy 3 marks. 1, 2, 3. Then we're looking at B. And what you've got to do is do some calculations. Gross profit margin, operating expenses to sales, return on assets and profit margin. So there's profitability, 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 profitability. All profitability we're talking about. Okay, so my first one is my gross profit margin. How do I calculate my gross profit margin?
Gross profit divided by net sales.
Yep, that's right. So, gross profit margin or gross, yeah, it is gross profit margin. So my gross profit margin is my gross profit divided by my sales. So in Walmart, it's 12,720 divided by 49,590. Can someone give me a balance on that? And in Maya, 100,385 over 405,020. What do we get? Give it to 2 decimal places only, or 1. Doesn't bother me. So that's my first calculation.
Sorry.
25.6%. And in Maya's instance, it's 100,385 divided by 405,020 equals 24.8%. So that's my gross profit margin. My next one is my operating expenses to sales. So my operating expenses is my amount here, 10,295 divided by my sales. By my 49,590. Can someone do a calculation on that one for me? And my operating expenses to sales here in Maya is 81,490 divided by 405. What's the first one? Did anyone do it for us? .76% or 20.7, let's try to go 20.8%. And what have we got here? We've got 81,490 divided by 405,020, 20.1%. Ooh, big difference. The next one is my return on assets. Or what we call ROA. So it's my return on assets is my profit after tax divided by my total average assets. So 1860 divided by my, what is it? 16,375. And I got 14,845 divided by average assets 167,070. So he's done a calculation for me. .3, 11.4%, I'll say. And my other one is 14,845 divided by 167. What was that? 8.9%. Ooh, big difference. Huge difference. And my last one I want to calculate is my profit margin. So my profit margin is my profit divided by my sales. So now I've got my profit here divided by my sales. So I've got 1860 divided by my 49,590. And once again we've got 14,845. 405020. And what do we get? 1860 divided by 49,590 equals 3.8%. And this one would be 14,845 divided by, where's my delete key gone? 405020. 3.6 or 7%. Okay, now all those numbers look pretty tight.
Is there going to be an analysis question in the
Say again, analysis question? What about an analysis?
where you compare?
Okay, it says compare and contrast, so now we're doing that. So what we've done is we've had to calculate them, so we haven't finished this question yet. So just don't kick back just yet, just hang in there for a few more minutes. Alright. Okay, so what we're aiming to do is now compare and contrast. Now what I want you to tell me is which one's got the bigger one. That's all. Okay? Gross profit margin. Walmart higher than Myer. Okay? OPEX to sales. OPEX to sales. Walmart higher than Myer. Return on assets. Walmart higher than Myer. And profit margin. What have we got? Walmart higher than Myer. Now, if you just give me that, you'll pass. Now I'll show you how to get good marks. Okay? So Walmart is higher than Myer. So Walmart, so I'll just do Walmart has a higher markup. So I'm just going to do this in point form. Walmart has a higher markup than Myer. Okay. OPEX to sales, Walmart manages expenses better than Myer. Return on assets, my return on assets was 11.4 versus 9. Walmart makes more efficient use. (11.4% to 8.9%). And profit margin. The profit margin is difference of 3.8%. What do we say here? Walmart, better profit margin. Maybe a less competitive price business. Better purchasing of inventory and management of operating expenses contribute to better profit margin. I'm going to tell you to answer those questions. So if you just give me the directions, you'll get enough to just pass. Now you should be able to all pass this question, because everyone should be able to go, that number's bigger than that number. Hopefully you can, because if you can't, you're in the wrong course.